Hello, aloha, hello. So welcome to investing market analysis with Pablo Heman here. I'm trying to create a relaxed background for everyone here so that we're not all freaking out about Bitcoin's tanking. Now, of course, everyone wants to know where the heck is Bitcoin going to now. And the reason why I don't do many of these live, but I'm going to jump straight onto it. The reason why this is so important right now is because it's a crucial time in the markets. We have not seen basically markets behave like this, the Federal Reserve inflation behave like this in 40 years. So without further ado, let's have a look at what's happening with the Federal Reserve. Now, first of all, I want to say that basically I'm going to look at the stock market as a proxy for Bitcoins, because now I know a lot of you guys are going to be like, okay, I want Pablo to talk about the stock market, the Bitcoin, not the stock market. Oh, by the way, this is going out to my Discord first. My Discord friends and audience or followers, members are going to have a look at this first, and then a few days later, I'll post it on YouTube for the public. And so the thing is, because Bitcoin only has 12 years of history, it doesn't go back far enough. We need to look at what the Fed did with interest rate rises, with hikes, with quantitative easing, quantitative tightening, with all of that, and how did that affect the market? Because we're about to head into that environment again. Now, why don't we just look at Bitcoin straight up? Because there's so much market history to analyze. Over the last 100 years, how many times has the Fed hiked rates? How many times has that caused a crash or a recession? And how many times has that basically, killed risk assets? You could only get a proper analysis of that by looking at the stock market, because, and I'll tell you, that's the reason why. But see, the stocks are actually highly correlated to Bitcoins. If, say, there's going to be a stocks bear market, if, say, stocks go down, say, like something like 30, 40%. I mean, NASDAQ has already gone down, 40% already? 20% already. And Bitcoin's already gone down like 53%, when it went down to 32K. So what that means is basically analyzing the stock market is going to give us a good understanding or proxy of what risk assets such as Bitcoin and Ethereum will do when the Fed tightens. So without further ado, let's get straight into it. So here, for example, we look at the times when the Fed tightens rates, hikes their interest rates. So here is the see that blue line we're tracking, or you might call it cerise if you want to use the right term. That is the Federal Reserve's Fed funds rate, effective Fed funds rate. So it's when they say Fed's hiking rates, they're talking about that. Now this here, this purple line is quantitative easing or quantitative tightening. It's what they call the Fed's asset balance sheet. Basically means how much bonds have the Federal Reserve bought, which is quantitative easing. That's what we call printing, when they buy bonds off the market from the world, or when they sell it, it's what they call quantitative tightening, which is pretty scary. So let's have a look here. A lot of people, so we're essentially right here, right now. See, that's April 2004. We're kind of near here because interest rates are about to lift off. The market is predicting a 94% probability of interest rates rising by 25 basis points come Wednesday, which is the 16th of March. Now, so if we're at this point here, and most people in the market are saying there's nothing to be scared of because we've seen rates hike before. See what happened here. The Fed hiked rates from, say, 04 in May 04 all the way up to, say, 06 in June. That's 13 months, and nothing happened to the stock market. It kept on going up, and that was a major move. I'm using the S&P 500, and that means Bitcoin will very likely keep on rising as well, because it means risk assets are going up. Just get that through your head, guys. Bitcoin and stock market, they don't move 100% in tandem, but they move close enough in tandem. We've all seen stocks going to tech, especially tech stocks, going to a bear market, and therefore, Bitcoin went into a bear market as well recently. And in fact, Bitcoin moved early. So that's how you could say Bitcoin moves like a tech stock, but much more sensitive. So, okay, the market is right. A lot of people in the market, a lot of analysts are right when they say, okay, just because, see, rates are being hiked, see, we're following this blue cerise line here, doesn't mean that the market's going to drop. So initially, just as the Fed was telegraphing, it's going to raise rates, there's a reaction by the market, right? Kind of like what we're seeing right now, but more severe. And then basically, well, actually, yeah, probably a little bit more severe than that, because S&P 500 is down 12% right now. And then as the rate rise actually started happening, the market was like, oh, this is nothing. I have rate rise for breakfast, and it keeps on going up, going up, going up, until the Fed flattened out, and they said, oh my God, recession's coming, and then boom, they start lowering rates, and the market realizes, oh, it's too late, recession's here, boom, and it crashes. I mean, look at that on the S&P 500. It went from in 2000, that's 2007, 2008. Well, that's the 2008 crash, 156 down to 68. I mean, that's like a 55-60% decline. If the S&P 500 did that, imagine what will happen to Bitcoin. So now, let's have another look. So since 2008, have you noticed this? I just want to mention this. Since 2008, have you guys seen that the Fed funds rate down the bottom has been going flat? But however, this purple line has gone from flat to shooting straight up and just kept on going and going and going. Now, this purple line is what we call the Fed asset balance sheet. In other words, it's how much bonds, MBSs or treasury bonds, it has bought from the market. Think about it. What does the Federal Reserve do when it buys bonds? If it's buy bonds, it has to use money to buy it, right? So therefore, I'm taking bonds in and I'm giving out to them in exchange for money. I'm giving money to the market. That's what he's doing. That's what people mean by Fed is printing money, because the Fed doesn't have that money. It just presses a couple of zeros or prints that money and gives that money to the banks, the insurance companies, and they sell the bonds back to the Fed. So the market gets the money, Fed gets the bonds. That's how quantitative easing or money printing works. The reason why this is so important is because the market right now, the Fed is about to go on another rate hike and another QT or quantitative tightening, which is the opposite of handing money to the market. It's basically taking money out of the market by selling bonds or letting the maturities roll off. Technical difference, doesn't matter. So that's really scary moment for the market, and that's why Bitcoin's gone down 53%. Will it go down further? We're trying to answer that question here. So okay, now let's have a look at this. So in 2008, famously, what's it called? The Fed started printing money, so we see this purple line shoot straight up. That's when Bitcoin was invented. A year later, it says, we've got to stop this. We've got to stop abuse of fiat money. The US dollar is fiat money. So they're saying we've got to stop abuse of fiat money. And that's why Bitcoin has been taken off ever since. And it pumps every time. Put Bitcoin side to side with the Fed asset balance sheet, this purple line. It almost pumps every time. Every time the rate of increase of the Fed balance sheet steepens. So okay, as you can see, the economy was famously going pretty bad. They call this the GFC crash. So if we now look at the purple cerise line, that's the Fed interest rates. It's gone flat for 7 years, from 2008, 2009, all the way to 2006. 7.5 years, 7 years. For all that time, see, it went flat until they started raising interest rates again. Now, that's how scary this thing is. Now, see, again here, the market is kind of like, just before raising rates, this would be October 2015. Just before raising rates, the market was scared again. It drops, bounces, and then drops again. Kind of like what's happening right now. And people are like, this is nothing to be scared of, because once the Fed starts raising rates, starts going up, then it basically keeps going. The market will follow and keeps have a melt up moment, keeps going up, going up, going up, and then only when the you could argue only when the Fed starts cutting rates because they're facing a recession will there be a problem, and then the stock market crashes. This crash here happened in March. Obviously, that was due to COVID. So it's arguable whether if COVID didn't happen, what will happen to the stock market? Will it be another crash? I think so. I mean, I can show you more examples of this. Now, the important thing here is to not only look at the blue line, which is rate hikes, but also to look at the purple line, which is QT, which is the opposite of QE, the opposite of printing money, which means taking money back from the market. That is a big deal. That is a really big deal. Markets really hate that. So let me just show you what happened. So we can see here in 2017, last quarter of 2017 here, the purple line started going down. As you notice, it very rarely goes down, and this is going down not even by a lot. When down, like say, Fed had 4.5 trillion, it went down to 3.76 trillion, which is what, like a 0.75 trillion move, which is kind of like a 15%, 17% reduction. And look what it did to the market. Basically, the SP 500 went from 292, let's call it 293, down to 233. So that's a 60-point move on 293. That's a 20% move. That is basically a bear market. That by definition, that's a 20% move. That's a bear market. Keep in mind, the SP 500 still has not hit a bear market yet. So SP 500 is only down 12% right now, and we still have not started lifting rates yet, and we still have not started tightening yet. Now imagine if we start doing that. Of course, people say that, it's when they start raising rates, it's nothing to be scared of, because you see, when they started raising rates, the blue line starts rising, but the market still keeps on rising. It's probably more scary when they start lowering the asset balance sheet, when they start tightening QT, quantitative tightening. That's when the markets start dropping. Now, I will give more evidence at the end of this video on why QT is scary. So here's the thing. Right now, this is here we are. We are about April 16th. Oh, come on. April 16th, we've gone flat again. And obviously, you see the purple line shoot up again. Printed a lot more money. We've gone from last time 4.5 trillion, say 4.5 trillion, to now close to $9 trillion. I know. That's why people want you to buy Bitcoin, and they have a point, because the Federal Reserve had just been abusing the US dollar. Let's put it that way. So we can see this line just rising dramatically, this purple line here. And so far, look at the stock market. Even the mention of rate hikes, which is about to start, and then QT, which is also about to start in a few months. If the war stops, then we've already had the stock market have this reaction. Now, if the other commentators are right, that's not what I'm saying, but if the other commentators are right, then basically what happens is the market goes sideways, as I've shown you previously, and then it goes up again. Once the fear, they say buy on rumor, sell on fact. So we've been anticipating the Fed to hike rates. There's a lot of fear. The market is dropping. Nasdaq already in bear market territory. But then, as soon as the Fed starts raising, people are like, okay, we scared the shit out of ourselves. When this thing actually starts happening, it's actually not that bad. So basically, the Fed, the market goes sideways a little bit and bounces up. That's what everyone is thinking. I don't necessarily agree, because I think we're in a very different environment. I understand their logic. I think they could be right, but I think maybe 70% chance I'm right, and 35% chance they're right. See, what's different this time is, see, previously they would go back not just to 2017 cycle, not just to 2003 cycle. They would go back to 92, 91, 98, all these different cycles of previous recessions and say, look, just because interest rates are rising, it does not mean the market crashes. But keep in mind, there was no QT before, right? There was no QT. See that line? That it has always rose steadily. Only in 2008, because the GFC, because the US economy was so stuffed, it was so stuffed that people were wondering that QE was kind of invented. This type of QE or money printing was invented to save the US economy. And I'll give you an example. See, this is untenable. Let me just find that. It's going to be 1 second.